Hello, this is Japanese Economic Review Channel. Today, we present the Japan Macroeconomic Briefing for March 2026. We will assess current executive conditions, sectoral momentum, and recent government policy interventions to give you a comprehensive economic outlook. Japan's economy is recovering moderately, driven by actively improving employment and income environments. However, emerging headwinds, particularly geopolitical escalation in the Middle East and U.S. trade policy shifts, require our close vigilance. Comparing February and March, core economic momentum remains stable. Private consumption and business investments are picking up moderately. Furthermore, consumer prices are now rising moderately, signaling a shift from the previous month's pace. Our policy engine operates on three pillars. First, aggressive fiscal deployment for a strong economy. Second, emergency relief, including strategic oil reserve releases due to Middle East tensions. Third, tight BOJ coordination targeting sustainable 2% inflation. Retail sales jumped 3.0% in January, bolstered by a moderate recovery in real employee income. While dining out increases, consumer mindset remains slightly cautious. Conversely, housing starts contracted, highlighting broad-based weakness in that sector. Business investment continues a moderate recovery, with a 5.4% rise in non-manufacturing capex and robust software investments. Meanwhile, public investment remains firmly supported by a 2.5 trillion Japanese yen supplementary budget, fueling local independent projects. Despite U.S. trade policy impacts, corporate profits improved by 4.7% year-on-year, led by non-manufacturing firms. Industrial production remains flat. However, bankruptcies and total liabilities are ticking up, indicating growing systemic friction. We currently face severe labor shortages, reflected in a -38 Tankan employment DI. This market friction is definitively driving up wages. Crucially, real employee income is now moderately picking up, offsetting the inflation drag. Consumer prices, excluding fresh food, grew 2.4% year-on-year. While core inflation remains flat, nearly half of consumers expect prices to rise by 2% or more over the next 12 months, making inflation psychology a critical factor to monitor. Between late February and March, financial markets experienced high volatility. The Nikkei swung significantly before settling near 53,700. The yen depreciated to the 158 range against the USD, while 10-year JGB yields rose slightly to 2.2%. Globally, recovery is moderate, but clouded by Middle East uncertainties. The U.S. economy expands slowly with rising capital investments, while the Eurozone shows a modest pickup. Meanwhile, the UK faces slowing recovery due to restrictive interest rates. Within Asia, India and Taiwan are experiencing rapid expansion, driven largely by external tech demand. In contrast, China is moderately slowing due to real estate stagnation. Korea and Southeast Asia show signs of a moderate recovery. Our ultimate objective remains confirming a virtuous cycle. Severe labor scarcity drives wage growth, boosting real purchasing power. This sustains consumption, enabling pricing power and corporate profitability, which in turn funds further investment. Looking ahead, Tier 1 risks involve immediate Middle East impacts, already prompting strategic fuel subsidies. Tier 2 covers U.S. trade policies, and Tier 3 highlights macro sensitivities like market volatility and fragile consumer psychology regarding inflation. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.